All right. Good afternoon, everybody. Sorry we're a couple minutes late. It's technology issues. We started the day with no internet, and we've got a guest speaker, Erik, who's got spotty internet. So just one of those things. If we haven't learned to adapt in 2020, then I don't know what is going to cause us to learn to adapt. So we're really excited to talk today. This is another installment of our monthly webinars that we do on the last Wednesday of every month. And it is our purpose and our what we believe and why we do what we do is to be a guide to help families make smart decisions about their finances. And we think that is done through education and communication, helping people make plans with good information. And this webinar is just one of the many things that we do to get good information out there. So I'm excited today to talk with a couple of folks, one from our office, Lauren Kukuwinsky, who is our director of client experience. And Lauren, just as a quick background, is hi Lauren.
Hi.
She's from her house in Louisville, and Lauren was a long-term employee with Kennedy Financial. Her husband's in radio, and several years back had to move out of state, so we lost her as an employee. We missed her a ton, stayed in contact. Through this COVID craziness and remote working, we got pretty good at it, and reached out in June of this year and kind of said, hey, do you want to come back? And she did, and started right up, and it's been seamless. And Lauren's really in charge of engaging with clients and providing a deep level of service and experience, making the client experience great, and she does an awesome job. So we're going to talk about goals today with Lauren, which is fun thing to go over. And then as a natural transition, we're going to talk about the election as well. So I don't know what was your draw today, if it was the election or the goals, but we're going to cover both of those. And on the election, we're excited to have a couple of guys from Lord Abbett, who's a great mutual fund manager partner that we've used over the years. And we have Erik Britt, who's going to kind of lead that discussion on the election and things to maybe be concerned about, things to not be concerned about, just paint some perspective on certainly a volatile time of year. If anybody watched the election yesterday, hopefully we're giving you more facts and information versus just whatever that was yesterday. So let's get started. This is just a quick disclaimer. We're not affiliated with Lord Abbett. We are a Dave Ramsey Smart Rester Pro. Kind of our attorneys give us all these disclosures. So this is all the good stuff that you can read on your own time. This is kind of the format. We're going to start off with the last 100 days, our goal challenge that we got out there to clients and anybody that want to be a part of it. Then we're going to jump into the election and do some Q&A. So if you have questions along the way, you can text those directly to us, and we'll try to get to as many as we can. There it is popping up there, 248-528-0485. You can text that. We'll take those questions and kind of stagger those. We have some, I had a couple of questions that came in before, and we'll make sure we cover all of those. So let's jump right in to our portion of it, Lauren and I's portion of it. And, one of our core values is to act with purpose and intention, and goal setting is just a great way to do that. And Lauren, tell us a little bit about how the idea came about and what this kind of looks like.
Yeah, so the initial idea kind of came from a conversation that I was having with our director of operations, Nicole, just kind of about how 2020 hasn't exactly gone as anybody thought it was going to say the least. And I, at the beginning of the year, had created a vision board with kind of my goals for 2020. And it was kind of a really good lesson in, like, we make plans and God laughs, because it all kind of fell by the wayside once the pandemic hit, and once we were home, it was harder to do things like go to the gym, or we're in a new city relative to us, so explore a new city, all of these things that I kind of had planned for this year. And we were kind of talking just about how we can kind of reframe the narrative and maybe the rest of this year hasn't gone quite the way that we thought it was going to, but about how we can finish the year strong and set some goals that really like kind of, for lack of a better word, redeem the rest of the year and how it's gone. So that was kind of where the last 100 days challenge came in, just kind of on a whim. We looked at the calendar, and 100 days prior to the end of the year is September 23rd. And so we just kind of said, hey, like, let's make a really big push to set some goals and achieve them at the end of the year.
Yeah, no, that's kind of cool to see. And Lauren mentioned the vision board. I'm one that I have a spreadsheet for everything, right? I can plan out the next 10 years on a spreadsheet and look at what that is. So we are natural goal setters.
Yeah.
Not everyone is. So Lauren's going to talk a little bit about kind of what, if you're not naturally a goal setter, what are kind of some general areas of how you set goals and what that looks like. And over the course of the next few minutes, we'll talk about best practices kind of leading into the challenge that we have out there. So you want to touch on that a little bit, Lauren?
Yeah. So like you said, that you and I have kind of talked about how we are natural goal setters. I also get teased a lot by my husband about the number of spreadsheets that I have to track things and plan for things. And the thing about it is that I'm a really natural goal setter. I'm not necessarily a natural goal achiever. And that is kind of caused by two things. One, my type A personality, where I love to plan, can kind of get in the way of that sometimes, where I have a tendency to, when things don't go according to plan, kind of crumble. And I'll touch on that in a little bit. But I also kind of came to realize that I wasn't setting the right kind of goals. And through this challenge, I've kind of looked at, what makes a good goal, what makes a goal achievable, and how can we set those goals. And one of the things that we found was this idea about setting SMART goals. So SMART goals are specific, measurable, achievable, relevant, and time-bound. And so kind of getting into that, the setting specific goals is important because, you can say something like, I want to get into shape, but like, what does that really mean? And how can you go about achieving that? Like, that's kind of just this amorphous, vague goal that you can set. Whereas saying something like, I want to be able to, I don't know, bench press 150 pounds is something specific. That's something that you can set a benchmark for and achieve while kind of achieving this overall goal of getting into shape. So that's one thing, is just make sure that your goals are specific. The second, make sure that they're measurable. Setting measurable goals kind of helps give you wins that you can celebrate on the way to achieving your goal. It's kind of like the debt snowball that Dave Ramsey talks about, where you can celebrate paying off these smaller debts on the way to paying off your larger debt. You have wins that you can celebrate along the way that keep you motivated. So having specific metrics and data that you can track on the way to achieving your goal is also really important. And then something that doesn't sound obvious, it sounds obvious, but isn't always, is making sure that your goal is achievable. So don't set goals that are super easy, but don't set goals that there's no chance that you are going to be able to achieve them. Like, losing 20 pounds in 2 weeks sounds great. Like, if we could do that, all of us would be, but it's not exactly achievable without sacrificing your mental health, your emotional health, your physical health, and, sometimes your financial health. Like, that's important things to take into account. The part about goals being relevant, I've been kind of asking people, why do you want to achieve the goal that you've set? Giving it relevance in your life and figuring out what your why is kind of a driving force behind you wanting to achieve those goals. And it's something that you can think about on the days that you're not super motivated, or the days that you are kind of having a hard time. It's kind of a driving force behind you achieving the goals. And then the time bound, I don't know about you, Brandon, but I kind of work better under a deadline. So
Yeah, I
that
think
that's
I'm a
kind of where that puts
procrastinator by nature, so putting timelines out there, maybe I don't do it all equally, but having a deadline is important,
me.
and then really measuring and then setting the next goal from there. Yep.
Yeah. So I know that, and we'll talk about our goals a little bit, but the goals that you and I kind of set are very similar. But do you want to talk about some of the different goals that our challengers have set?
Yeah, so I mean, we've been blown away. Like we kind of just threw this out there, and we knew internally we were going to do this, and we said, why not get it out there for anybody who wants to be a part of it? And we've just been blown away. I mean, some of these things are way more inspiring than we would have thought. We had people taking a group that they were in and getting people involved in that, and we've just been blown away by people and what they're doing. I mean, some, we kind of said it did not have to be a financial goal. So we're a financial planning firm, but, we're very much proponents of if your mental health is good, your physical health is good, that can help your financial health. Right? They all kind of tie in together. So we left it open-ended. We've had some financial goals of, somebody said, put a financial plan and use the every dollar budgeting tool. That's pretty cool. Right? Somebody who maybe didn't look at their numbers every month is going to do that. Exercising 30 minutes every day, more on the physical side. Spiritual, reading the Bible cover to cover. I think that's a cool goal. There's some things, that's an aggressive goal in 100 days, but good. I mean, that's awesome. Reading books. Somebody is actually writing a book and wanted to finish that before the end of the year. Going on date nights with your wife. That's, a lot of these things made I don't know, humbled me a little bit of, man, I probably have 10 goals I could set and improve on, but really cool to see. And then Lauren's going to go through, we won't get into it yet, but what we're going to do to be accountable for that. And accountability is a big deal in accomplishing goals, certainly on the financial side. And as you're describing all of these SMART goals, it's what we do as financial planners, right? We help you set specific goals and provide some accountability and put some timelines on all of it. So just a good exercise in doing this in everything you do. Certainly we do it every day on our finances. So to get specific and kind of share ours and talk about accountability, we're getting it out there, right? So anybody who signed up for the webinar or watches, we have a lot of people who watch as replays. We're getting our goals out there in front of us. So Lauren, tell us about yours.
So the goal that I set is I want to run a 5K by the end of the year. I actually signed up for one on Halloween that I'm definitely going to have to walk part of, but I figured it was a good way to kind of set a benchmark for what I want to accomplish by the end of the year. And I talked a little bit earlier about like, what's your why? And so my dad was diagnosed with heart disease this past year, and I've watched my grandma kind of struggle with Alzheimer's and dementia as well. She's, we've had to move her to a memory care facility this past year, and just kind of doing some research on how to prevent both of these things. They say the best thing that you can do is exercise and change your diet. So I thought that this would be a good way to kind of, help the overall goal of living a healthier lifestyle by setting a specific goal. So that's kind of where that came from. What about you, Brandon? I know this is a little bit.
We've got similar ones, and maybe that's maybe we work too hard and have too much stress and don't find time for. Mine was to lose 30 pounds in 100 days, and beyond not wanting to have my pants fit the way that they do, it was a bigger why, and it was not having the energy to keep up with my kids and to do the things I need to do. To just certainly 2020 has taught us our health is incredibly important, and just taking that a little bit more serious. And I tend to, for me, stress and running a busy financial planning practice, I make excuses, and I think I go to food as like my my specifics, right? If I'm getting into measurables and things that I want to do, it's being active 4 days a week. Got to ride the bike, got to lift weights, got to do something, getting moving 4 days a week, and planning out my meals. I think when I set this goal, I think it was about a week before my wife and I we couldn't decide what to get, and it was later at night, and we had a $34 DoorDash Taco Bell order, and that was sort of the Wow. All right. We need to make some changes. So excited to do that, doing meal planning and kind of righting this ship before the end of the year is the plan.
Yeah,
Uh,
I know too, Steven, he set a goal of getting a strength routine going. He's got specific, he wants to work out so many times a week. So you can kind of tell where all of our heads are at. But then Nicole, she decided that she wanted to learn to golf just as to learn a new skill. So that's pretty cool.
yeah, no, we're excited for all the goals. And so Lauren's going to get into uh, the actual challenge and then some final kind of tips and strategies on how to do this and put yourself in the best position possible to succeed for this challenge. So kind of wrap us up here, Lauren.
Yeah. So again, the 100 days challenge, the reason why we wanted to open it up was because we want our clients and we want the people who engage with us just to have the best chances of success in all of the areas of their life. Like you said, Brandon, it kind of all plays in together. Your emotional and mental and physical and financial health kind of all are intrinsically tied together. So we just wanted to help everybody. And I'll get into the accountability aspect here in just a moment. But, just as a way to set everybody up for success as they go to achieve their goals, there are some things that you can do to really help you. And those things are to plan proactively, to measure daily, to check in intentionally, and adapt accordingly. Now, it's kind of funny that you brought up the meal planning thing, Brandon, because that kind of ties into the planning proactively. Like, you're going to hit roadblocks. You're going to struggle with your goal, but kind of taking a look down the line towards the future and foreseeing some of those things that you're going to struggle with and making a plan that can really like make or break you. So just going, I have an issue. I struggle with time management. And, the last thing I want to do is think about cooking a healthy dinner at the end of the day after work. What can I do to help set myself up for success? Meal planning is a really easy way to do that. And there's so many different ways that you can plan. And, for all the different types of goals that we have, just take a look and kind of take stock of the things that you generally struggle with, things that you might have a hard time with, and plan from there. Measuring daily, again, it kind of plays into those, like giving yourself wins to celebrate along the way to keep yourself motivated. If you're measuring something daily, like while I'm running, measuring how far I go or how fast I go every day and seeing that like trend get better and better, that's going to make me feel good and it's going to keep me motivated. So that's really important. Checking in intentionally. So the accountability factor is huge. And I'm going to touch a little bit more on that when I talk about how the challenge works. But having someone that you can check in with daily and hold you accountable can really, really help. We found a statistic that said that having an accountability partner can increase your odds of achieving your goal by 85%. That's massive. And just having someone that's checking in with you, making sure that you're staying on track, is really helpful, but it also makes it more fun just to have a partner and people that you're doing it with. And then adapting accordingly. So I said earlier, my type A personality helps me and hinders me when it comes to setting goals, in that I'm really good at setting goals, but when things don't go according to plan, I kind of crumble. And something that I've had to learn is that adapting isn't a failure. Adapting or changing your goals is actually a sign of growth and like a sign of having learned lessons along the way. So it's okay to adapt and it's okay to change your goals. And maybe, maybe running a 5K for me won't be realistic, but running a mile is. So you just got to kind of be okay and be willing to adapt. And I think that's one thing that 2020 has taught all of us. So to get into the challenge a little bit more, the way that the challenge is going to work is that you can sign up between now and October 3rd. And there's a link just on here where you can sign up. And the challenge is we're going to check in with you. The initial check-in is kind of going to gauge your goal, make sure that you've set SMART goals. Like I said, we want to set you up for success. And then also kind of gauge your confidence and your excitement level so that we can keep an eye on that throughout the challenge. And then for the next 100 days, every 25 days, we will email you and check in with you and see how you're doing and see how you're journey is along the way, and kind of send you some encouragement and act as that accountability partner for you. That's the goal. And then if you complete all of the check-ins every 25 days between now and the end of the year, then you'll be entered to win one of 3 $100 Amazon gift cards that we'll be giving away. Now, I want to say you don't have to accomplish your goal in order to be entered to win the gift cards. All you have to do is do all of the check-ins. So we're kind of practicing a progress over perfection mindset. We just want to see that you tried. That's all. You don't have to flawlessly execute every goal that you've set. You know, keep in mind, like I said, progress over perfection, grace over guilt. All we're trying to do is just end this year a little bit better than where we're at right now.
Awesome. Great job, Lauren. Thank you. We're excited to celebrate these, accomplishments or putting in the effort and the work. And now, is kind of a time to transition and change gears 180 degrees. But, truly when we're setting goals, it's very similar to our financial planning goals. And, for instance, when I'm setting a personal goal of losing 30 pounds, I've got some hurdles and some distractions that are going to come along over the coming months. I've got Halloween, which typically from November 1st until Thanksgiving, I systematically steal a little bit of candy from my kids. I've got to resist that distraction and that temptation. Then I have the excuses of the holidays are busy and where do I find time to exercise? Financial planning is no different, right? We are setting long-term goals of paying off debt, of building wealth, of doing things with money that are greater than ourselves, and being generous and impacting the world. I mean, that's what this money, these plans with our money, in the end, why we're doing all of this. And there's going to be distractions along the way. There's going to be volatility. There's going to be global pandemics. And I'll tell you that this one, more than anything, this upcoming election, I think, has caused just whatever your political views are, just this uncertainty, this thinking that this time it's really different. And in such a short term, event that, is going to happen once every 4 years and has happened once every 4 years, for a long time, we want to talk through how can we avoid those distractions? How can we have, some facts over fear? And we're really excited to bring Alex and Erik from Lord Abbett to talk about this upcoming election, put some perspective on the market, and just help us have facts behind these things, not just panic and fear. So I'm going to turn it over to Alex and Erik. Welcome, guys. Thanks for being a part of the webinar today.
Great. No, thank you. Thanks for having us. So I just having some issues with my internet, so I actually switched computers. Can everyone hear me okay?
Sounds good.
All right. So we'll go with this. Improvise, adapt, overcome, right? So again, thanks for having us. Glad to be here. We wanted to share some perspectives, on the election, specifically how it applies to portfolios and investing. Definitely a lot of information out there, a lot of noise. And what we want to try to do is really, keep things very kind of bulleted, and give you, again, a couple key things we think you can implement, hopefully to benefit your portfolio. So we're going to go through a couple of slides that we prepared. And I think what we want to really focus on is, number one, some perspective on what happened over the last couple of quarters. Number two, we're going to look at different outcomes because even in 2016, it was not clear even the day before who was going to win the election. So, we can basically look at these scenarios, we can come up with analysis, and what we want to try to do is make the best decisions, understanding that none of us, have a crystal ball. So, we've been through obviously a very volatile time with the coronavirus pandemic. We can show here what happened with the S&P 500 back in February, March, April. I mean, I was actually traveling in Japan in Australia through the month of February. And I can remember, seeing people in Tokyo, 75% of people wearing masks and thinking, what is going on? Why are so many people? And at that point, like, none of us knew, really how bad Corona was going to become. And sure enough, now I'm back here. I'm in the middle of Manhattan, and 75, 80% of the people walking around wearing masks. So again, it's amazing how things have changed, how the world looks so different. But what we saw, again, was just tremendous volatility in that period, but a fairly rapid comeback in stocks. So stock prices, S&P 500. What really happened? You can see towards the end of that chart, aid came from Congress, aid came from the Fed. The numbers are huge. When you look at some of these numbers, $2.3 trillion, another almost $500 million in aid that came through in the second wave of aid. To put that in perspective, it's actually dramatically bigger. And for those of us that, study history, or maybe were even around, during the Great Depression, think of the New Deal. Think of some of these massive programs that were, implemented to kind of get the economy out of the Great Depression. On a size basis, these economy than even the New Deal was. So again, to put it in perspective, a massive amount of aid was injected into the economy much more rapidly than it has ever been done before. Much faster than 2008. The New Deal took, years to really implement, after the Great Depression. So we had a lot of aid quickly, and that basically addressed, it didn't solve the problems, but addressed a lot of the key problems about market functioning, about, getting, money into the hands of people that were going to be put out of work, the millions of people, again, to try to really, stave off a complete economic catastrophe, which did not occur, thank goodness. And so that's really why you saw this, nice recovery in the stock market. Not every market, other bond markets did not have the same experience. You look at that and you scratch your head. Things seem pretty, volatile. The news still seems pretty disturbing about COVID and across the country. Why is the market done so well? And that's really why. When you look at it, it's a lot of aid came very quickly. Some of these key events kind of remind us all the things that happened in such a compressed period of time. February, March, and into April. We had, arguably years worth of events happening, in a 2 or 3 month span. So again, we lived through it. The big takeaway was you had the big downside volatility. I think, even at the lows, all of us experienced investors out there could see the similarities to what happened in 2008. And I think, people standpoint, I think, again, we look at those key events, look at all the volatility, all the things that occurred over that period, and it's basically, again, I'd argue several years worth of events in a compressed period of time, and again, that aid coming through to really help from that standpoint. So, again, on balance, when you look at returns, the drawdowns that we had in March, not all that uncommon. And I know those of us that have been in the markets, for many years, you've lived through it. You've seen these events occur over your investment lifespan. But, what we saw wasn't all that uncharacteristic when you look at it in the perspective of long-term performance. So I think, what it really does is more so than try to predict, where's the market going to be next week or next month. I think it's really more about, just going back to basics, diversification, having a high quality fixed income component to offset your equity, having different kinds of equity, value growth, that diversification effect is really key in these prior drawdowns. And I think you, again, can make that case even in this most recent drawdown. Having diversification was certainly your friend and definitely helped soften the blow, and I think really helped keep a lot more people in the market for a longer stretch of time. So now we'll get more into the election and some of the issues there. And I think, again, from our standpoint, it's less about who is going to win and trying to predict that. And I think it's more about looking at the different scenarios and make sure that we're invested properly for the opportunities and the risks that can come from either scenario. So when we look at returns before and after elections, what you generally see is markets very much dislike uncertainty. And so what you see with uncertainty, you may have heard some of this terminology like volatility in the market, or there are technical things that are looked at like the VIX index, and they're very technical, but basically what they do is measure the amount of fluctuation in the market, the amount of volatility. And so what you generally see is when there is uncertainty about something important, like an election, or in 2008, there was a lot of uncertainty about the financial system. So when there's a very large issue that's very uncertain, you get volatility. And volatility generally leads to sometimes poor markets going in. And so what we generally see is, and you can kind of see that on the chart, like going into elections you get volatility, but coming out, generally you get some better performance. So I think, we saw this kind of spike, and again, this is, again, not to be technical, but this is the actual index that measures the amount of volatility, the amount of fluctuation in the markets over time. And what you'll see is, again, we had historic levels of that from COVID, but it stayed elevated. And part of the reason that it stayed elevated is kind of coming into this election cycle and the uncertainty about what that really means. But also, it's something that is known. I think, the important thing about financial markets are the markets surprised about what it's occurring, or are they kind of building that in? And so when we look at different measures in the financial market, so we can look at futures markets, there's different very technical markets we can look at to take us further than just, hey, where is the S&P at? What is the yield on the 10-year Treasury this week? We can look at other factors that help us to assess what does the market expect about actual fluctuation going forward? Like, what does the market expect about volatility going forward? What is the market building in? And so when we look at these metrics, what we find is the market is actually already expecting a lot of volatility. So again, oftentimes that can set you up for better performance, post-election. And so what you tend to see is maybe not necessarily even 12 months out. So we don't want to be too short-sighted in our outlooks. But when we're looking out 3 years, even 5 years after some sort of a big event like an election where, the party switches sides, let's say, 3 to 5 years after these elections, really any 4-year general election cycle, the returns tend to be better after the election, regardless of which party wins, right? And that might sound strange because things are very, bifurcated in the country. Both parties are very far apart in the direction they want to take us. However, what you can say is you will see a plan, right? So basically, there's uncertainty going into the election. You don't know sort of which plan will be implemented. After the election, you basically see a roadmap. You see a plan. Businesses start to make some decisions. Should I be building new factories? Should I be, hiring additional workers and sales forces based on the parts of the economy they may do well under a new plan? Like, for instance, if there's a big spending on clean energy, right? So think about the implications for certain industries, and from that perspective, what that might mean going forward. And now you can think about how a business person is going to look at that and plan and make decisions and hire people. And all these things tend to be very beneficial for the market. And again, it's kind of, almost irregardless who wins. The important thing for the market is, let's get through this volatile time. Let's get through this uncertain time. Let's get a roadmap to the other side. And then you really tend to get some better performance, generally speaking, 3 to 5 years from the election period. And it's a little bit more inconsistent when you're looking a year out. But again, it's sort of something you would expect. As that uncertainty starts to fade away, that should reduce volatility, should reduce all the fluctuation. And normally that tends to lead to a little bit of a better market, for the equity market. So we're getting there. We're into early October now. A couple more weeks of this, and we'll have, hopefully, we'll have some returns. So what do you actually do as an investor? So again, I think, the main things that we try to do here at Lord Abbett are look at all the scenarios, what could go well, what might not go so well, and how is that going to affect certain industries that we're invested in. And so we've come up with kind of a scorecard, which is basically a roll-up of all our investment professionals' opinions on various segments of the market. This is focusing on the stock market. We have lots of information on the bond market too, if anyone wants to ask, but we figured we'd focus on the stock market to keep it simple. Couple things. So innovation growth, that would really be, think of that as kind of like your true higher growth parts of the market, like technology, biotech, e-commerce, all the things that you would expect in the growthier part of the economy. What are the possible implications of the election? So again, if there's a Republican victory and investors assume that maybe the economic growth starts to pick up potentially, there could be that thought. It may or may not happen, but I think it's more about what do people expect. That tends to be good for more cyclical type companies. And I think what you'll see is, and again, kind of going through the possible implications here, intermediate and longer term strength and innovation paced by work from home. So, work from home companies like Zoom, DocuSign, there's a number of companies out there that were already kind of, in those trends. And a lot of these trends towards work from home obviously got accelerated. So again, the ability to sign documents without having to FedEx things it would be companies to really think about from that standpoint. Durable growth is kind of, again, more steady growth. It's kind of, think of it as that next level down from high growth that you hear a lot about. You don't hear as much about the durable growth type of companies. But, there you want to think about, healthcare maybe, what are some of the implications? Less favorable backdrop for healthcare services. So, a lot of talk about drug pricing. What does it cost in the United States? Those things could potentially be headwinds from that standpoint. And then, student lending, that's been a big issue and certainly could be a headwind for certain banks. In addition to, by the way, interest rates are incredibly low right now, which tends to be a difficult environment for the banking system as well. And focusing on healthcare, as you can see, biotech. So we've basically been able to map the human genome with the technology. I remember in the 1990s, there was a lot of attention about that. Back then, it would cost, $1 million, $2 million to map a genome. And now the technology is so good. You can map the human genome now for like $1,000. So that's the reason we've been able to even think about having vaccines that might be available in a pretty quick time. In the past, when we were children, a vaccine might take 5 years to come to market. Now, keep our fingers crossed. Hopefully we'll have one much faster than that. And this type of technology enables that. Again, that's something that we really want to focus on for healthcare. Medical devices, that's a big demographic shift with a lot more people may need hip replacements and other procedures. Medical devices really play into that. And then obviously some big challenges for healthcare providers, pharmaceuticals, et cetera. Drug pricing, it's a political hot button. Again, these are things that may come up in that sector, things to be aware of as an equity investor. And then a couple other things just to think about. Dividends, we're big proponents of dividends that tend to grow over time. So this would be stronger companies with good balance sheets. Sometimes these type of companies look very different than the companies you'll see in a growth portfolio. So it's a kind of a diversification conversation. If you're, again, hearing a lot about the same type of names in tech and biotech, et cetera, and growth type portfolios, dividends really give you a way to diversify that. So again, looking at dividends, what are some of the potential implications here? Again, profitability, just depending on what happens with the election. Tax policy is a big deal. My corporate taxes be headed up. These are things to think about. Again, potential for dividends. If you have to pay more in taxes and expenses, you have less money to pay out a dividend, right? So it's important to look at things like the coverage ratio. In other words, how much earnings power does a company have to really maintain and increase a dividend? Just buying a company that has a nice dividend right now, might not be a good move if that company is set to cut that dividend in the coming quarters because it's going to be under pressure for some of these things. And then value companies, again, think of that as almost the other side of the ledger from growth companies. Growth companies, it's more about growth. Investors are willing to pay up higher prices to buy those names, higher PE ratios, we would refer to them as. Value company is kind of the other side of the ledger. We're looking at assets. We're looking at other industries, again, that you're not necessarily going to see on the growth side. So think more consumer staples, industrial, manufacturing, automotive, those type of areas are more on the value side. So again, let's look at some of the implications there. Financial services, again, look at the rate environment, the regulatory environment could be important. Energy. So right now, the thought there is, hey, what's happening? A lot of residents are moving out of big cities and they're moving into the suburbs. I'm seeing it here in Manhattan. I know people are seeing it across the country. There could be a lot of demand to build new structures, facilities in suburban areas, possibly. So again, materials and then energy as well. So we'll see what happens as the economy recovers further. I know the average amount of miles driven on highways is starting to creep back up again from the lows we saw back in March. I can tell you, just trying to drive around Manhattan the last month or so, the traffic's getting worse and worse all times a day. Nobody wants to get on the subway or the bus. Everybody wants to take a taxi or rent a car and drive around. So, these things have implications in the energy markets as well. And again, healthcare, more consumers have greater access to insurance. Like, let's say if they extend Affordable Care Act or find a replacement, again, it's not so important how that gets implemented, but when it does get implemented, fewer people have bad medical debts in that example. That's better for hospital credits. So again, there's implications here in equities and other markets too, bond markets, municipal bond markets. There's implications across the financial markets. But, those are some of the major things to kind of think about and sort of game out and look at scenarios. And again, we can't be here to predict what the election is going to look like. Again, that wouldn't even have been very useful back in 2016, the night before. The night before, the predictions as to what was going to happen in 2016 didn't pan out. And again, eventually, a lot of these scenarios did play out, even though, again, how things played out, not exactly as expected. Having a plan, having these scenarios, looking at, we put probabilities on these things. What are the percentage chance this is going to happen? That's going to happen. And then you structure your portfolio. And that's basically some of the main things that we would try to get across there, just from an investment standpoint. So with that, I will stop, take any questions, or if anyone else wants to jump in, feel free. But that's what we had.
Okay. Thank you, Erik, so much. This is I appreciate people in your position who are way smarter than me, but can still talk to us in a way that is relevant and helpful. So this was really cool. If you want to text in any other questions, I'm going to summarize a couple that have kind of come in from the previous correspondence. Can you talk a little bit about, because I hear this a lot, if Biden wins, I don't think there's a whole lot of controversy, will taxes go up, right? Can you talk on that? I mean, has this happened in the past? What impact? How do companies adapt? How do individuals adapt if taxes were to go up? What does it mean in relative terms if taxes were to go up if he wins?
Yeah, well, I mean, so I'm probably, myself and maybe people sitting in like San Francisco or in New York, we're probably in one of the worst positions with taxes, because we have to pay a New York City tax, we have to pay the state of New York tax, and we have to pay federal income tax. So, there are some people sitting in both these places that are literally going to send half of their money to taxation under today's policies. So, and it's incredible when you look at history. I believe, even within 45 or 50 years, the top tax rates have been as high as 80% at the federal level. So we are in a period where, as onerous as taxes seem, we're actually in a fairly low tax environment. It's hard to say, because I think we all see the dollar figures we send to the IRS, and it's astounding. But we're in a pretty low tax moment. So I think the issues are, we've just spent, we just saw the slide, we spent several $1 trillion tiding ourselves through the first part of the corona crisis. The numbers are getting stark. Federal finances are starting to look very alarming. You see like $20 trillion in debt outstanding, and our economy is about $20 trillion in size. So we're kind of getting to these numbers people expected maybe 15 or 20 years from now. It's happening now. So my point there is, probably no matter who gets elected, I know some platforms are like, we want to lower taxes more. It doesn't seem likely. Like, these bills have to get paid, right? And it does seem like there's some probability at least we get flat taxation or higher taxation. If it happens at the corporate level, you probably would see a negative impact on the stock market right away. But then companies would adapt and figure out, how to navigate that environment. And so there's always a way. Whatever happens with taxation, even if they increase that rate, they can do different things, change their balance sheet, the amount of corporate debt outstanding, convertible bond. Like, there's different ways that they can finance what they're doing that are more efficient in whatever tax regime is going to occur. So I don't think it's like the end of American business. If taxes go from 21 to 28, I don't think that at all. It may make things a little more challenging. And they've been able to navigate that environment before. And, we saw the charts. So if you ever see a chart of the S&P 500 the last, 50 or 60 years, we've had radically different tax regimes, and the markets have found a way to prosper. So yeah, I don't think it's the end of the world if taxes go up on corporate. They'll find a way through it. And, at the individual level, you've got to think that's going to make people gravitate more towards municipal bonds and other ways to really shield whatever income they can shield. There are fewer and fewer ways to shield income nowadays, especially if you don't have a small business or something where you get lots of write-offs. There's really not that many ways as a taxpayer to shield from taxation other than municipal bonds or, holding equities for long periods of time and not selling them. So you don't take a lot of capital gains. There are ways around it, but yeah, probably a safe bet. They may be heading higher and or at least stay the same. I don't really see how they can go lower. With all the money we've just spent, especially, and those bills have to get paid. So, but yeah, I think we'll be fine. And yeah, short-term volatility probably, but the markets will find a way to power through it, we believe.
No, that's good stuff. And yeah, I mean, we spend a lot of time in education and discussions with clients that short-term volatility is to be expected, actually embraced. And we're long-term focused, 10 years, 20-year clips of time. Can you talk on questions that come in on, well, I think this time's different, which I think they say that's the four most dangerous words in investing. And I want to get out of the market, or I want to hold a whole bunch of cash and then I'll figure it out when things get better. Can you talk on some of the dangers of that and the decision making you have to make if you do that? When do you get back in? And just kind of in general touch on that. People thinking, should I go to cash for some or all of my money right now?
Yeah, it's extremely difficult. There's even hedge funds and practitioners out there that claim to do that. They say like, hey, we have the ability to take this portfolio, to cash when that needs to occur, and then reinvest you when that needs to occur. And what you found historically is a lot of those strategies, they just don't get it right. It's very difficult because the problem is not so much trying to assess what the downside is going to look like. The biggest problem is, what I've seen at least is they get one side of it right. Like in 08, they went to cash and now they're heroes. But, if that is what occurred and that's what you're famous for and you're in the news because you went to cash, how hard is it to flip-flop and now you're the investor that's invested at the exact moment? Like it just almost never happens, So that's why it's so difficult, when we're trying to play that game, to go completely to cash, avoid the downside, then when you get back in. And by the way, if you don't get back in, we've all seen the charts of what the stock market looks like over decades. I mean, if you don't get back in, the opportunity loss is immense. So, it's a tough game to play. And I think the best approach is still, and I even do this in my own personal portfolio. I've been a professional investor for, 25 years. And I don't do that in my portfolio. I diversify my portfolio. I'm mostly in mutual funds that are diversified, because I don't have the time to spend my entire day to look at that portfolio.
I think we lost him a little bit. Don't worry, he just gave us all the secrets to the market and what to do, and that it's not that important.
We'll write them down.
Did we lose him completely? We made it through. So thank God. I know we're a little bit worried about losing his audio. Can we kill Erik's audio just for a minute? I think we're getting a little bit of feedback. So with that, it sounds like we lost him. I'm glad we were able to get through that. I think to kind of wrap up and summarize as we get kind of to the end of this hour is we're big, and this is something that we say a lot. We have a newsletter that comes out on this that we're going to have more to the end of the year. Facts over fear. It's got to be facts. It's got to be a plan. We're going to build and focus on the long term and have those discussions, and that's how we act as a guide. And we cannot get caught up in the short term. And certainly we're probably as a nation more divided than I've ever seen us. And it's one of those things that we can't get caught up in our biases and our what we're really trying to focus on. We need to focus on your goals and your objectives and your plan. And that's what we do as advisors day in and day out with the clients that we work with. So I want to thank Lord Abbett, Alex, and Erik. I want to thank Lauren for coming and talking about our 100-day goal challenge. This was a really neat discussion to have today on a couple of different fronts. If you're kind of looking through, are you comfortable with how you're positioned? Do you have a plan and a process behind what you do? We're always available to talk. If you're new to Kennedy Financial Group and want to kind of just investigate what that looks like, we have a great discussion process of talking through your goals and really focus. We don't have all the answers and solutions, but what we do is we listen deeply. We get a feel for what are your drivers and what are your experiences with money? What are you trying to do? And what are your priorities? And help you craft a plan and walk side by side with you as a guide to navigate your specific financial journey. We'd love to take that journey with you. So I want to thank everybody for being on the call today. And if anybody else has questions, reach out, let us know. We're happy to help and talk further. So good luck on the 100-day challenge, and we will talk to you guys more soon. Thanks so much.
Thanks, Brandon.